So this is the first ever series that I'm ever kind of doing live and recording. It's mainly about methods on how to trade more consistently and for a profit. So this is a technique I like to use. First of all, I use correlation from DXY. So basically, DXY monitors all USD pairs and puts it in one chart. An easier explanation. So this is a technique I like to use, kind of finding liquidity, right? So what I would do is I would start off by taking my fib tool, and now what you'd have here is you want to take it from the highest point in Asia, which is around here, and then the lowest point that the London Open makes within a window of 15 minutes. So now what this means is basically this is what we have, right? Think of it like this. This area, we have a strong sell. And as you can see here, the chart respected it here as well. Everything above this point, we'll call it buy side liquidity. Yeah, but everything above that point, we'll call it buy side liquidity. Buy side liquidity, we'll just call it buy side lick. So that means basically if this area breaks up there, you want to be in for a buy, or you're looking at it as if that area breaks and comes back into it. You know, the bias is that it could have just been a probe or what you call a liquidity run or a stop hunt. Many people like to use the term stop hunt, but it's just a key level. So we'll keep that there, and as you can see, London Open has made a new low, so we'll drag it down further there. So now with this type of trading technique, it's a technique of finding consistency nearly, and it's understanding where a chart will give you any reaction. So that being said, it's just a waiting game now. So what we're gonna do is we're gonna use this chart for Euro USD, we're gonna use Euro Pound, and we're gonna use GBP USD as well. So now we're gonna do the same thing with GBP USD. This is a little bit more sloppy. So the lowest point of when Asia was active was here, right? And we've got our highest point where London opened, which was here. So we'll keep that there. We'll make it more precise in a moment. So we know we're just kind of engaging out these levels, looking at these levels, and we're all going to come back to it. Okay, and now, it's not looking very nice at all, but in terms it's really a lot of consolidation. But kind of how I like to see it is that if there is a bigger range on that particular day, the bigger range means a bigger move is going to come. Ooh, what did I do? Okay, I fixed it. Okay. Yeah, there we go. So a bigger move on the day indicates that a bigger trade will come in because there's more sellers and buyers in one place of the market on that given day. You know what I mean? So how I see it is that it's not really to do with sellers and buyers, but mainly of how price is charted on a chart. If there is a bigger range, it kind of makes way to believe there is a bigger move that's going to come through. So as you can see that if we had taken this as London opened, what we could have done is we could have taken the sell here, and our reasoning would have been it's a reaction of buy side. It couldn't break the buy side liquidity, therefore meaning that it is going to sell. But you know, we're still early into it. We just need to wait a few minutes to kind of get our structure confirmed. Have we done GU? Yes, we have. We've also done EU now. Yes, Yes, we have. Okay, interesting. So as you can see here, it reacted off the bottom, which we call sell side liquidity. Sell side, sell side liquidity. And now, whenever there is a move, it's also very important to have the 50% marked. So on this given structure, how we can see today is going in terms of this, we can see that DXY is somewhat on the day, it's making lower prices. Yesterday it came from high. Yesterday it made new high prices, but what we're gonna do is I just wanna look at it on a bigger scale for a bit. So what we can see there is that it reacted there, and when it had touched this price yesterday, it seemed to be somewhat of a significant price because coming in today, it struggled at the same area. Yeah. So we're gonna go back down to our charting time and see what we can do about this. So there is two types of trades that we can begin to look at. We can look at buying GU or EU, what's this point hits, and if it kind of gives us a respect on it, we kind of look at it as an area where the chart will react, you know? So it's kind of giving us somewhat of a reaction. Yeah, so we're gonna jump in, we're gonna go in GU buy at this area right here. So nothing too fancy, just a GU buy with a 15 pip stop loss, you know. So sorry, I was just setting it on my phone. So we've got somewhat of a perfect reaction there. It's reacting really good. It's not somewhat breaking. Yeah. So what we would like to see. Oh, look here. This is really important. Is that on GU, it's also giving us a reaction at that same area there. So what we would do in this situation is we jumped in a buy there because it reacted at a 50% point, a 10 stop loss. What we're gonna try to do is once a pair reacts from its equilibrium, we can either trade it to the buy side liquidity point, or we can trade it above. So this would mean we're finding our next high, which is around this area right here. So this here, buy side liquidity is up there. So once our buy side liquidity breaks, buy side liquidity, yeah, so that's that. I normally trade a 1 to 2 because I stay more consistent. It's easier to hit a 1 to 2, but with this particular trade, yeah, like I want to just show you guys that I know what I'm saying. So I think we can even take it the further note. Yeah. So basically, what we're aiming for is the next high point. So this is an easy target because it can be considered our next swing high, which can be up there. Yeah. So there's a few things we can do now. We could move stop loss into like a break-even level, so that there is nothing to lose on this trade. So on my side, I am going to do that. I am going to move stop loss into break even. because we have got our reaction there. We shouldn't be coming back into it to test it. So yeah, and we'll use this here to kind of mark where we're trying to get out. Yeah, so now all we're gonna do is like we're just gonna kind of sit and wait and see how it goes. It's not really, you don't really have to use, well, to an extent you do kind of need small time frames because it can help with creating much more depth in kind of drawing the tools in terms of level to level. Yeah, but this is what I consider interesting is all the price that lays above here. It's kind of an indication to us that it's been trying to trade higher, and the power is on the side of it making a new high. So yeah, we're still running good. Our stop loss and profit is about here, so which is really still good for us. So we'll put this around here. So with this trading technique, there's the type of structures that you would be kind of looking for, and eventually you reach a point where you don't kind of need to draw the tools each day. It's just kind of like a guideline up to confirm what you're seeing is actually true, it's actually knowledgeable. Yeah, now I'm just gonna let the trade run and do its thing, and we're gonna observe it, but we're just gonna wait and see how it goes. Yeah, so what I ended up doing was on my end, I closed out on my 1 to 2, which was up there. I took a screenshot on it on my phone, um, mainly because I wasn't trading the, it was like this, yeah, 1 to 2. I wasn't trading the move, trading really higher on my side. That was just for educational purposes for you guys. But we're still gonna like observe it to see if it can go there. So now, one of two things can happen from this area, right? Mainly, this was mainly my reason for closing, is that if it rejects here, it's kind of an indication for us that it's rejecting to break the buy side liquidity, and price will ultimately chart lower, like price lower for us on the chart. Yeah, so it's, for me personally speaking, if you want my advice on it, if you stick to the small TPs, you increase your consistency. Of course, you're gonna miss out on your occasional big winner, but it takes a certain amount of discipline to get in, and get out at the right area. But yeah, we're gonna observe this and we'll come back to it later. So like here we had used the buy side liquidity as our area to get out. So when the trade kind of kept on rejecting there, we could have actually jumped on the sell side of things because we sort of struggling to make new highs. But yeah, but that's all from me.
cheers, guys, and let me know what you guys think.